All righty, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. Hope everybody's doing well. Sorry, I was just having a conversation about the Oanda trading platform with some of the folks in the chat room because they were asking my opinion of it. And look, I don't use MT4. Maybe I am using MT4, but I'm using the platform that I'm using is their desktop platform that has. It's got like the integrated trading view charts. I really enjoy it. So yeah, I'll show you like the image of what I just shared in the chat room. So like this is, the trading view charts, and then you have your little, your little asset boxes here, and you just click on it and it, takes you to the trading view chart, which then will show you your positions and orders right in the charts, which is nice. That to me is very beneficial. So it's something that I like to use. So and Chad said definitely not MT4. Yeah, and I'm not. I've used MT4 in years past. I'm like, well, unless they've really done something different, I don't think this is MT4. So let me see. And first trade. Hold on, just give me 1 second. I'm sorry. Platforms, desktop. Yeah. So if you are here in Oanda, you have the Oanda Trade desktop platform. It looks just like this. I have mine in black. So that's for those of you that use Oanda. So try it out. It's cool. It's nice. It's a change for me. Well, there's a few big changes that I've had this year. When I've used JP Morgan for like the last 5 years. So I'm, and just so you guys know, I still have a, forex.com account. I used, Thinkorswim for futures when I trade futures and equities. And I have, Oanda. I'm trying to incorporate more of my FX trading into Oanda now, because I love the platform, right? I like it. I'm getting used to it, but retail spreads are still really big. They really are. I am used to trading with the JP Morgan platform for like the last 5 years. And when you're doing institutional spreads, don't forget there are commissions, and the commissions are big because when you're buying, $1 million in currency at a whack, you're paying a lot of commission too. So just because the spread's smaller, you're like, whoa, spread, it's like sometimes like the bid and offer in the euro would literally be 1/10 of a pip, if not less. So it's basically almost paying the same. There's like zero spread, basically, is what I'm telling you, what I was used to trading. So now when I'm trading the euro and I see almost a full pip spread, it's like, dude, they are just, raking you over the coals. But, you also have to keep in mind you're trading much smaller position size too, right? So, anyway, it has taken some getting used to, but this is one of the things I have to, and I'm sorry we're going to have this conversation right now. I didn't mean for this conversation to actually take place. It's just something that we were chatting about in the chat room. So I'm gonna bore you with one last detail. One of the things that's really reshaped me this year into trading small again. And when I say small, small is a relative term, but what I'm trying to say is I will sit. Let me just give you an example. Okay. I'll just give you an example of kind of what I do. All right. I might short the euro dollar and sit in it. And I can sit in a $200 or $300 or $500 loss and not be really freaked out about it, right? if I'm looking for a 12, 13, $1,500 gain, I'll, and so you think about that position sizing, I may only be trading, 100,000 in currency, but it's fine. If I'm risking $400 or $500 to make $1,500, I'm fine with that. Right. But I have to sit in a much longer term position because the spread's so wide. Where, when I was trading, with JP Morgan, I could hit the bid with, 2 million in currency, and it moved down 3 or 4 pips, and I could take that off and, and then book $700-800, but I might pay, I might have paid $150 in commission. Right. I made $600, $700, scalping the euro short. I could do that as well. Obviously you can get stuck on the wrong side of that too. So just don't think it's all, roses and, rainbows and unicorns, but I had to really reshape the way I approached the market this year, trading my own money and going back to quote unquote retail pricing. And, my spreads are like super wide now, a pip and a half, a pip. Sometimes, depends on the liquidity. You trade something like, I just bought the Euro Mexican peso. I bought the Euro Mexican peso. I was immediately down, a couple $100, like immediately. Now I'm up a few $100, which is fine. But I have to sit in it for a while, because I literally bought it right here as it was coming down. I bought it like right here. What is an hour and 15 minutes ago, wherever it was, you know what I mean? So yeah, I mean, that's it. Raj says you have looked at IBKR. Who's IBKR? IBKR. Raj is anyway. Interactive brokers. No. Maybe I should look at them. Huh. Anyway, it's just getting my head back into the game as far as retail goes. You know what I mean? So yeah, maybe I'll open an account with them and check them out. And that's Thinkorswim, isn't it? Isn't it interactive Thinkorswim? Oh. Rick says, IBKR, I've been kicked around. I've been kicked around. Got it. All right. Sorry, guys. You know what? Let's get started on the analysis part of this. But anyway, I guess we were just talking about, trading platforms and retail and, blah, 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 blah. And I just kind of wanted to give you like my outlook on how, again, it's kind of how I'm approaching the market now. I have to think a little differently. Like I said, my position sizes are much different, but I can swing them. You know what I mean? I can sit in them and not worry. And that's a nice thing is I sleep great at night. There's a lot to be said for that. Do you know how much easier it is for me to sleep at night? Not waking up in a cold sweat at like 12:45 a.m. after sleeping 3 hours and panicking whether or not I lost like 30 or 40 grand overnight while I'm sleeping. That's like, that to me it's worth its weight in gold. I sleep well. I get up and I'm like, I might get up in the morning and like, oh, I made a couple grand, or, I'm down a grand, it doesn't really freak me out, Anyway, I'm sorry. Brand says 5 minutes till stock market open. Yeah, let's get started. So the euro dollar, bear flag pattern. Obviously, I'm going to write down first level resistance at 115.75. I cannot believe I had my order at 115.75 and I didn't get triggered. I'm so pissed at that. It's bearish. bear flags playing, bear flag and a bear flag, bear flag and a bear flag. So next resistance is 116, you know, well, 116.40, but really it's 116.50, but I'm going to write down 116.40. We're going to cruise through this because not, oh shoot, I didn't do that. Damn it. 115.75. Dang it. 116.40. Bearish euro support. Really the support's down here at 115.05. So, I mean, we may hit new lows before the NFP. I wasn't expecting that, but that is entirely possible right now. Because the euro's trading so heavy. I mean, you might get people, especially like look at equities right now rolling over. I mean, you know, we hit the 4,400 level, 618. It's looking like we might give some up. If the S&P is like drop back to like 4,350, there's a good chance that the dollar is going to rip. I mean, when I say rip, I mean, you know, the euro might, you know, trade back down to like 115. I mean, it's entirely possible now. Sterling 136, 136.60. I know we wrote this yesterday. Same as 136.60. I am still bearish. You know, lower highs, lower lows. Support at 135.20, then 134. I know I'm going to be cruising through this, guys, just because I don't think analysis has changed a whole lot from yesterday. If I'm not mistaken, we wrote down 73.75 yesterday, or 73.25. I'm sorry. Yep, 73. Boom. And then 73.25. And like I said yesterday, we got to get above that to be, you know, and that's going to be key resistance. And I do believe we're in a range, and I still believe this might be an inverted head and shoulder pattern. And yes, there's got to be some more symmetry here. You know, we probably have to do this for a while, right? Support is going to be 72.20. Let me delete this. Do you remember our conversations from yesterday? Kiwi, you know, after the RBNZ, I'm actually thinking this is what's happening. Okay. Resistance, though, nothing's changed here. Resistance is going to be 69.80. Support right now, I'm going to write down this support because it's the spike low from back here in July. But you know, the thing is if we start getting down here, the chances are that we're going to, if we break through this trend line here, we break through this support, we should see these lows again. And, you know, trading is not about, as you guys know, trading is not necessarily about, oh, I'm going to catch the whole move. Is just being able to identify a directional move for just, even if it's for an hour, like, you know, you may not have the best risk reward being short through here, but you know that, you know, it's got a good shot of making it from here to here. So, anyway, 69.80, 68.90. This is resistance. And I think that the, you know, Kiwi is gearing up for a bearish breakdown. Benedict in the chat room made a good point. He's like, man, I'm surprised this dollar Canadian's not higher. And I am surprised too. And I'm a little concerned because I am long the loonie. Okay. My cost average, if you guys don't recall, I've owned the loonie now for like the last week at this 125.90 level. I'm still long. My average hasn't changed. I've just been sitting in it. 125.89 is my average, actually. It's like right here. I am concerned that it's not getting a lift. We need to break this 126.50. And I have a feeling it's gonna have its move tomorrow. And I don't know if I really want to stick around for it, but 126.50 and support right now is 125.40 and 124.90. 125. Okay, I think I wrote down 125.50 yesterday. I'm just going to be, oh, I guess it is. Well, no. I think we can write down 125.50. I think that's right. It's because the spikes down there get bought up. So it's, we just need to be alerted as we approach that level. Okay. Stocks are opening their bid, of course. Look at this triangle tightening up. Nice and tight, right? That means support right here is, let me get rid of that for a second. We don't need that. Support's going to be 92.45, resistance 93.45, roughly. And what you're seeing here is the support is, it's been slightly increasing every day, right? The reason why it's slightly increasing every day is because it is an ascending trend line. Dollar Norway. I'm still long this. Been sitting in this for a couple of days now. My average is at 855.84. So, I mean, K-Man got the really good entry yesterday at 852. Not as much, but a break above this 865 would be big. I know we wrote that down yesterday, so I'll write it down again today. 865. Oh, you know what? At 865 and 880. I mean, all still need to break that 865, 851 or 851.5 or 852. By the way, does anybody watch that show Billions? The Showtime show Billions. Does anybody watch the Billions?
I can tell you one thing for sure without having seen it. The sequel is going to be called Trillions.
No, it's a show. It's an ongoing show. But I cannot ruin it for you guys. You guys have to finish it up this season. Everybody has to finish the season, and then we can talk about it.
So, but homework for everybody.
But homework. But for those of you that know, I've been a big Billions fan for years, and if you've been in the chat room, you know that. I'm going to tell you that I don't know if I'm going to be watching it after this season, but you have to finish the season. So, 2037. But I'm not going to ruin anything for you. I'm not going to tell you the reasons why, but you have to watch it. So we were talking in the chat room a little bit earlier about support in the dollar MEX being from 2035 to 2048. Last night in the analysis, I had to remind Steve was asking me about it. I'm like, yeah, last night 2045 level before buyers step back in. We made it as low as 2046, and buyers step back in. Obviously, it took us up 20 handles higher. So this is really key support, and I think we could probably just do this now. That's that. Here, let's drop that down just a little bit. That is really key right there. So it's 2040, and resistance is going to be back up here at 2073. And I'm going to probably, I've already reduced some of my dollar Mexican peso longs, and I took a loss on it because my average is at my average dollar Mexican peso long is at 2069. But I bought some Euromex, and so I kind of swapping out dollars for euros, which it just kind of I'm doing that to get the dollar equivalent out of there because I don't want to have, oh shoot, what did I say was that? I don't want to have as much dollar exposure going into tomorrow. You know what I mean? So let me check something really quick. I betcha pants. It's a 618. Boom. That is pretty good resistance right there. So anyway, if we can get back up towards this 2070, 2080 level, I will continue to reduce my dollar Mexican peso exposure. Because even though I want short Mexican exposure, I'd rather have it in Euro Mex than in dollar Mex at this point. So yeah, to reduce my exposure going into non-farm payroll and keeping the dollar out as a factor, right? Dollar yen. Sorry, I'm going to continue on. Just kind of giving you guys some strategizing in my head here. So dollar yen looks like we're building a triangle here. Now I'm for those of you that are trading this intraday, I mean, you might get a pop higher, you might get a pop lower before NFP. I don't know if I'd really care about anything at this moment that is sorry guys, I'm just trying to drag this over here. That's obviously all big resistance now. So 1210, 1080, and you guys have fun playing in that. Okay, that's your sandbox. And I'm going to leave it to you guys to play in that. I'm not doing it. By the way, dollar Mexican peso is still bullish. Dollar index. Look at that wedge. Like I said yesterday, so if you remember our conversation yesterday, I still think there's a chance that we pop out of this wedge today, kind of get all the dollar longs freaked out ahead of tomorrow. I still think that that's a risk. But for right now, support's going to be at 94, resistance at 94.50. And we have to keep it bullish while it's in this. I know we're up against such major resistance right now, but we have to stay bullish while we're above 94. And if we break 94.50, as I said multiple times yesterday, if you're short the dollar index, or excuse me, if you're short any dollars whatsoever, if we break 94.50, you really need to be very careful. Period. End of story. All right. Just please. So I'm going to pick up a little bit more dollar Norwegian krona here. So just give me a second. I do like the dollar note down here. As you guys know, I continue to buy little bits and pieces down here as much as I can. Okay. A couple different accounts that I'm dealing with. Platforms, just, trying to figure out which one I'm really most comfortable with. But anyway, all right, where am I at? Gold, silver, Bitcoin, S&P. Okay. So as far as Bitcoin goes, I know I tweeted about this yesterday. And by the way, if you're not following the ForexAnalytix Twitter account, you should, because I'm going to be using that quite a bit more than my own personal one. So just because we're, incorporating the live blog, if you guys haven't seen it, the live blog is here in where it says news flow in the ForexAnalytix app, right? And you can see, Ryan's posting there. That shows up as me in the live blog, but on Twitter, it shows up as ForexAnalytix. So, but you can see me as being the author. So I'm going to be on here more, and you'll see me incorporating that more as we move along. So anyway, sorry, Bitcoin 56.7. It's huge because that is a confluence of resistance. You guys know 56.7. Now, there's a lot of bulls out there, but my opinion is if we break back below whatever, not this high, that high, we break back below 52,000. We probably, if we break back below 52,000, we're going to head back towards, 47, 46, maybe even channel support. So, a lot of people are bullish Bitcoin right now, but I think it's just in a big old ass range. And the fact of the matter is if we do stop here, we're going to end up making a lower high. That's concerning because if you look at, the last time Bitcoin made a move like this, very similar, back in 2017, we made a high bounce. We didn't make as high of a high. Then we started building this, channel that looks like this, right? That eventually puts, Bitcoin back in the 30,000 range or, quite possibly lower. So this is the exact same setup as back here. Just if we can hold these highs. Do you guys see that?
It is indeed likely that we're building like a longer term type of correction or consolidation.
Yeah, I mean, it's just, I think that's kind of what's happening. And I think this is more of a consolidation, right? It's like, as
you said, Blake, people have started turning really, really bullish. And, that's kind of a warning flag.
It is, but and the flip side of that is there's a lot of institutional money involved in Bitcoin now, way more than there ever has been. So that's why I think that this is more of a longer term consolidation that you want to be a buyer of. Like I think of Bitcoin as being more of a asset class that you do want to participate in, because eventually we're going to be trading higher, in the years to come. So unless there's some massive, regulation efforts, taxation efforts, or, what's the other term I'm looking for? Banning, then, things get a little dicey, but let's just assume that, nothing's changing, as an asset class, there's so much money that's being made by Wall Street. It is now a Wall Street money-making tool, which, as you guys know, is what makes the world go round. So, being bearish Bitcoin doesn't make any sense. Not to me. Not as of the last few years with all this institutional adoption. There's too much money behind it. There's too many politicians in it now. And, it ain't going anywhere. So what does that mean for us today? Well, it just means what, that, we have to, I'm going to keep it in range for now. Even though I'm giving you the longer term bullish take, I just think that, now it's not really the time to be, long, like, well, maybe I'm wrong. Maybe we break out to 100,000. I don't know. Steve knows. Shoot, where am I?
I'm going to buy as much as needed to take it to 100,000.
Yeah. My days of bashing crypto is well over. I think it's an asset class that's going to stick around. We just have to, but you have to just be strategic about it. And I think you got to be logical about where you're buying it. That's my only take at this point. So 23,000, look at this failure. I mean, we could just, or 23,000, silver just cannot get a leg up. And, so numbers are the same, 23, 22, and then below that is 21, right? 2110. Going back to Bitcoin, my only thing that would change my mind on Bitcoin is if for some reason, the government saw it now as a really a big risk to threaten the dollar, and they have to take action. But I mean, it's just another quote unquote safe haven asset. It's like gold. That's why gold doesn't go anywhere now, because all the gold bulls have switched over to crypto bulls, and it rightfully so. It's just a different form of, inflation hedge, or, desk rock, paperweight. I own some, so, S&P. So somebody said it was a falling wedge. I'm sorry, I missed your comment earlier, but let's just really quick. I do believe, and I've had this wedge up there this has been drawn for a while. We popped above the 618. Oh, look at that. Damn. I didn't think we'd break above that. Okay. Well, that previous support should be pretty good resistance intraday. I would not expect that to be breached. But then again, I said I did not expect that the 618 would be breached either. So 42.22 is resistance. And I still believe we're bearish, guys. So just, oops, let me go ahead and adjust these, because I forgot Stelios is not here to correct me. Support intraday should probably be not that, but this. So 43.70. Okay. Did you guys hear that? Did you hear that, Steve?
Yep.
Yeah. I wonder if my microphone picked that up. I have the windows open again. It's that time of year, right? Bias charts finished, guys.
It sounded like a car.
Yeah, it was an alarm. Yeah, it was an alarm.
Okay.
You know what this is?
Oh, yeah.
That was easy. All right. Some of you get that. Oh, did I put the S&P? Oh, resist. Oh, I did. I'm sorry. Thank you. I did. That is a typo. I will fix that. S&P 44.22. Sorry. That was a typo. Thank you. Now I'm done. Okay. I'll take care of this. Steve, it's all yours. Thanks, everybody.
Thank you, Blake.
Thanks, everybody. Thanks for the correcting me, by the way. I need that early in the morning. See ya.
Bye-bye, mate.
Bye.
Okay. So what do we have today? As you know, I wasn't here yesterday, so we haven't revisited some stuff since the day before yesterday. The good thing about it is that nothing has really happened. I mean, yes, we did have intraday volatility. We did have the dollar moving higher both yesterday and a little bit the day before. The unfortunate part is we've also had obviously stock rebounding higher. The unfortunate part is that we haven't really done any decisive move one way or the other, which is to be expected because, yes, the market is now fixated again on the next piece of news, which, as you know, comes tomorrow. So do I think we're going to see some kind of a breakout prior to that? No, I think it's quite unlikely. As always, I'm going to start by focusing on two charts, right? One of them is the DXY and the other one is going to be the S&P. So the DXY is still trapped between the breakout area, which is roughly at 93.50, and this cluster of resistances located around 94.50 and 95. And as I said, I don't expect that we're going to easily see a move higher or lower prior to NFPs tomorrow. At the same time, we've had a little bit of a divergence, meaning while the DXY is mostly range bound, we've had the S&P moving, quite strongly higher. We retested more or less the same lows for a third consecutive day, the day before yesterday, before we turned higher, and then we had follow through yesterday. Although, as you noticed from yesterday's candlestick, this is a daily chart, by the way, we did have once again an attempt from the bears to take control of the market before they actually lost the fight to the bulls. We completely retraced all the losses and actually managed to close positive. And pre-market, there seems to be a lot of buoyancy today, and the market seems to be, rather optimistic as we are pushing higher. Now, have we confirmed that we found a low to this corrective move? The answer is no, we haven't, because we haven't broken through this channel, right? As I said at the end of last week, I think there is an okay chance that we have found a low, but we don't have confirmation yet, right? I'm hoping that the catalyst for getting confirmation is going to be tomorrow's data, so we don't actually have to wait more, right? So far, though, I have to reiterate that this move lower in stocks looks to me so far, right, very orderly, very nicely behaved. As you see, it's perfectly channeled. So as long as we hold above these 4270 area, I don't find any real reason why somebody would want to be overly bearish. On the other hand, I don't have any real argument for somebody that wants to be bearish where we currently are, since we're getting closer to this channel trendline resistance. I mean, from a risk reward perspective, I can't blame anybody that believes that we're headed lower from here and would be like, okay, I want to be lower here, and I want to have like a stop loss at like 4450 or even 4500, because I think that we're going to see another lower low, in which case the risk reward makes sense. I wouldn't be taking that direction in the market. But as I said, from a risk reward perspective, if you really for some reason convinced about it, there is a trade there to be taken, right? Not the trade I would be taking, but there is a trade to take that at least mathematically makes sense. It's definitely not illogical, right? Same thing applies. I mean, whenever there is no real direction in the dollar, I have to revert to my medium to long term thesis and bias for the dollar, which is short. But admittedly, you can be as long as you want the dollar against 93.50, right? It does make sense from a risk perspective, and we break through 95. And I do think that we're going to be extending higher towards the next confluence of resistances, which is a little bit above 96. Right. So there is definitely, I mean, the market is currently at a juncture that somebody can make a pretty good technical case for both being bearish and bullish. The good thing is that, as I said, the levels that would turn me from one to the other are very close to each other, which means that with a little bit of luck, even tomorrow, personally, I would be feeling more comfortable if we get a little bit of a movement to have a bias again, because short term at the moment, I have no bias. My short term bias since the end of last week is neutral, right? I don't think that's going to remain the case for much longer, because as I said, a move below 93.50 or above 95, and it's going to immediately change my short term bias either to bearish, which is going to align itself with my medium and long-term bias, or to bullish if we break through 94.50, 95, because I do think that we're going to be seeing some follow through with 96.10 being the next upside target. So having said all that, clearly puts the rest of the things in context. For example, if you look at the Euro USD, yes, it's underperforming. It's doing much worse, for example, than the cable. That's why if you notice, the Euro Pound is pushing lower and now getting very, very close to this large rectangles support, which is roughly at 84.60. Keep in mind, I think we break through that level, and I think there is more downside coming for the Euro Pound, and that might be an interesting trade for somebody to take that doesn't want to be currently involved with the dollar. Let's say that you're currently completely undecided what you want to do with the dollar, so you don't want to be involved with it, and that's a good thing, actually, right? I mean, you shouldn't want to be involved with something that you don't feel confident about, right? It doesn't mean that when you feel confident about a position, you're going to be right, but at least you have conviction. And when you have some experience, usually when you have conviction, you have a higher chance of being in the right side of the market. So I'm not I would really advise anybody that doesn't have conviction at any given time not to try to do something, right? I mean, not having a position is is a better position than having the wrong position just because you can't stay out of the market. Yeah, Euro Pound might be something you would be comfortable in getting involved, since it doesn't include the dollar. Same thing, by the way, for people that are looking positions that are not related to the dollar. The same case could be made about the Aussie Kiwi, and it's not by accident that I'm mentioning this again today. I mentioned it several times during the past week and a half. As we were rebounding higher after a big move lower, we noticed that there was some healthy momentum behind it, but we hadn't yet the confirmation that something has really changed. But look at what's happening today. Yesterday we closed exactly on this descending channel, standard line resistance, and today we seem to be pushing higher as a follow through. And if this is how it looks by the end of the day, then we're going to be getting a confirmed breakout and an overbought level after a very long period of time. And that is something you shouldn't dismiss, because definitely changes the bias having to do with the Aussie Kiwi to bullish. And this might be another interesting trade somebody would want to take, somebody that wouldn't want to be involved with the dollar as we speak, right? And this is something you can be even involved with today. Euro Pound has not broken down yet, but Aussie Kiwi seems to be breaking higher as we speak. Now, depends on which dollar pair you look at. Some of them seem like they've already been on the move, technically speaking. USD CAD is an example of that, right? USD CAD looks like it has broken down, and it has remained under this channel for like 3.5 days now. Let's see if tomorrow's NFPs is what is needed for it to actually accelerate to the downside. We've had this so far can be considered a false breakdown in the cable, following which it seems that we're building some kind of a bull flag. So there are charts that you can look at that are going to point towards a dollar bearish bias. On the other hand, as I said, there is the Euro USD, which has broken down from an important support area many days ago and still pushes lower. And that is definitely something you need to consider, especially if you're looking at the DXY, since the DXY is most heavily weighted towards the euro, right? So you need to keep that in mind. Now, Aussie, Kiwi, and some other of the commodity currencies are still treading water here, still in the middle of this descending channel. For example, in the case of the Aussie, more or less the same deal here in the case of the Kiwi, which means that neither of them is about to break either, higher or lower. Not imminently, at least, right? So probably even if we get some volatility tomorrow, I doubt that's going to be enough of a catalyst to get them to break out. By the way, we just got Canadian IVPMI at 70.4, quite a much higher level actually than previous reading, which was at 66. So from 66 at 70.4. Since I still have the USD CAD chart open, you will notice that at least the FX market couldn't care less about it. I doubt that we moved more than 2 pips following the news. So definitely not something that's going to move the markets, but nevertheless, we had it, so I'm mentioning it. Now, having to do with the rest of the assets, we have potentially had some interesting developments. For example, we had an interesting outside black candle yesterday in crude oil, which is potentially a nice bearish reversal candlestick following a very strong move to the upside. We were having a very nice follow through to the downside today earlier, although as you notice, we've already pared back the vast majority of the losses. In any case, somebody could take the short side, taking advantage of this intraday rebound and be short against yesterday's highs, expecting a deeper corrective move. If you notice, we've had the same type of event happening in the natural gas market, right? We were warning in the natural gas market that at some point this market, of course, is going to have a corrective move lower. I said, though, that this is a very, very dangerous market to try to fade because it has been having some massive up days, right? And taking the short side of a market that is in beast mode can be very dangerous. But yesterday's outside black candle is definitely a warning sign that we might be seeing a correction lower, following actually what we had already started seeing on the chart, which was a clear RSI divergence. Let's see if that can lead to a much deeper pullback. What I would be paying attention to, as you see here on the chart, is this ascending channel trend line support. We're some distance away from it, but if we do break below this, then we can see a move back towards 450. Let me make it very, very clear. I do think that this is going to prove to be another pullback that is going to produce a buying opportunity. I don't think that we found the high. I don't think that we're seeing the reversal. I think this is the beginning of some type of a corrective move. Let's see if it's going to be another shallow one or finally some deeper one that might finally give us the ability to buy into it, because so far, for quite some time, all the pullbacks in natural gas have really failed to retrace enough to produce an interesting buying opportunity in a market that has been going in one direction for a long period of time. Now, having to do with gold and silver, I really have nothing to add here. As you see, they're still consolidating in descending channels. Here is the gold market. Here's the silver market. As I've said before, we need to see a move above 23.16 silver in order for me to start turning bullish. We need to see a move above 1800 in gold in order for us to start being bullish. Until that happens, you can remain bearish in the short term. Of course, nothing has fundamentally changed, so my medium to long-term thesis remains very, very, very bullish. These metals, and not only, right? Platinum also. Platinum, by the way, if you notice, there is a little bit of a difference with gold and silver as we speak. And the difference is that platinum is currently testing the equivalent descending channel trend line resistance, as it has been producing RSI divergent readings since the beginning of summer, more or less, right? So let's see if we can get something more out of it. So far, RSI has reset to neutral, so nothing to write home about. But we break through this channel and we start seeing some momentum, and there might be something to trade here. I do believe that platinum has been battered a lot more than gold, for example, during the past several years, and I do think that at some point platinum might make a huge comeback, because look at this, right? This is the gold platinum ratio. Look at how it bottomed in 2008, not a coincidental period of time, right? With the ratio being at 0.4, platinum being a lot more expensive than gold, right? And look at this massive uptrend that followed, that peaked with this literally vertical last leg higher, which that last leg alone took this ratio from 1.5 to 2.5 to above 2.5, right? And since we've had quite a strong move lower, and now we've been seeing this rebound higher, which in my opinion has a high chance of being corrective. So I do think, and this is another trade that some of you that might not want to take a direct stance against or in favor of the dollar, or against or in favor of a specific metal as we speak, because you're undecided, this might be another trade that is worth paying attention to, because it doesn't really get you involved with any of that, right? It's the gold platinum ratio, which in my opinion has a decent chance of being about to roll over again and push to the downside, right? So in this case, you're not long or short any of the metals, you're just betting in the overperformance of one of the metals against the other. In this case, of the overperformance of platinum against gold. And in my opinion, it looks very, very interesting. We break through this channel's trendline support, and I think it opens the door for another big move to the downside, right? Don't forget, we've already had a massive move to the downside, right? From 257, which was obviously an all-time high, down to 136 in a very, very limited amount of time. Now, I think we roll over once again, and next time we're headed lower than 136, right? And if you keep the big picture in mind, yes, we can go a lot lower than 136. 180 that we're currently trading at is still historically an amazingly high reading for the ratio, right? So keep that in mind. Let me see what else. I think that's it, more or less. I don't think I had something else to mention, although, 41 winters and 41 summers old, you never know. Some brain, loses some of its ability to recall, but whatever. If I remember something else, I'm going to tell you. Let me look at your questions and go over them. S&P resistance wrong. Okay, that was for Blake. He corrected that. S&P wrong. Yeah. S&P is testing a falling trend line. If you're talking about this one, not yet. We're getting close, but not yet. My pleasure, Baroque. Steve, take a look at GDX, maybe starting to diverge. Let's have a look at it again. We did a few days ago, but let's have a look at it again. GDX. So here's the GDX. Last time we talked about the GDX, we were back there. I know that we've seen it since, but just to recall what we had, why this drawing is on this chart. Last time we drew something on this chart, not last time we looked at it, but last time we drew something on this chart, we were consolidating over there. And what I said is that this type of formation tells me that the GDX wants to post another move lower. And ideally, I would want to see that move lower being below this 3150 area, because it's a very important area and perhaps would help trap again some of the bears in the wrong side of the market. So it took a little bit more time to break through this rectangle, but we did indeed break to the downside. We've now comfortably traded below that 31.5 area. But if you notice, now if we take this pullback, you'll notice that its nature is not impulsive in any way, right? Now, you mentioned divergences, and I have to tell you that for the time being, I don't see any big divergence. This RSI reading over here on the daily was fractionally lower than that RSI reading. So for the time being, there is no RSI divergence, at least not on the daily chart, which I consider to be the most important and reliable one. Shorter term charts, give less reliable signals, right? The shorter term the chart, the less short term and less reliable the signal. But do I believe that we're getting close to bottoming out than anything else? Yes, I do. I do believe that we're getting closer to bottoming out than anything else. Now, the first thing I would be monitoring here is clearly this channel's trend line resistance, which currently more or less confluences with the 3150 area, which we've seen in the past, and how important it has been, right? So in general, I do think that we are currently trading at levels that buying the GDX is a very, very good medium to long-term opportunity. I do think so. Hi, Steve. Activision Blizzard. Could you comment on whether you feel this weekly cup and handle formation setup is still valid? Thank you. Absolutely. Let's have a look at it. Remind me the ticker. There it is. This one probably, right? Activision Blizzard Incorporation. Yes. Okay, last time we had a look at it was quite some time ago. And we talked about the potential of that being a cup and handle formation. This was definitely a flag. I mean, we said at the very least this was a flag, right? And it did play out like a nice flag. And then we started creating, and that's the last time we obviously had a look at it, judging from my drawing here, what looked like a triangle, which was more likely to have bullish than bearish outcome, but that didn't end up being the case, right? We did actually break down from there. And now we've broken down below this 86 something area as well. Now, listen, fundamentally speaking, I'm not really familiar with exactly what is happening currently at Blizzard. I do know a couple of facts though. Fact number one, there has been a lot of rage and a lot of a big movement out of World of Warcraft after 15 years that the game has been out and has been dominating the MMORPG genre. And that happened some time ago. And adding fuel to the fire, a few days ago, Amazon's new MMORPG game called New World was released, which from what I've seen from Twitch, for the time being seems to be capturing a lot of a big viewing audience. And you can safely assume that if Blizzard loses the cash cow of World of Warcraft, which seems like a likely scenario, that is a very bearish event for the company, right? So I can tell you that much. Now, technically speaking, that's the only thing I fundamentally know, right? It's not that I'm, I'm looking at, the, their accounting papers and everything else. I'm not going through the balance sheets, to give you more information, but I do know what I just told you. Now, technically speaking, the fact that we broke down below this area is also a bearish development, right? We also hit oversold levels here in the RSI. We're seeing a little bit of a divergence. We have earnings coming ahead in a few days, in 3 weeks, more or less. I would be very careful here. I would be very, very careful with the stock. I think there is the potential of a bigger upset and the bigger move lower. That's what I think. And I think there is a big chance also, irrespective of the earnings report, that there's going to be a warning for future earnings for the reasons I just mentioned. So I would be, I would be careful. I think that you can even be short as long as we trade below 86. That's what I think. My pleasure, David. Anything else, guys, gals, ladies, gents? Euro Swiss, very heavy, but good risk reward ratio for a long. I have kept monitoring the Euro Swiss for quite some time, I was paying attention to this descending channel. We had a brief false breakout higher that was followed by this rather decent move to the downside that seems to be currently unfolding. Now, you mentioned a good risk-reward ratio to be long at the moment. In my opinion, probably lower. Probably lower. I don't see something that would want to make me long here. I think we get closer to 106 and then we can talk about it. I don't see any real evidence that this move in the short term is about to reverse. So yeah, I would be looking towards 106 to begin with. Now, clearly, as you understand, we go back to a risk-on environment that should help the Euro Swiss recover, right? So it's another pair that's going to somewhat, not dramatically, but somewhat going to be, its fate is somewhat going to be determined but by what happens in a risk appetite globally. And as I've said before, there is no better barometer for that than the S&P. So that's what I think, Dimitri. Trend line from 2015, if valid. Trend line from 2000, sorry, looking at the wrong instrument. Trend line from 2015. Let's go to 2015. So we're talking about the crash, the S&P crash low that we had. You know what the problem is, that with any type of trend line you draw from there, that it depends on which brokerage firm you're looking at, and you'll find a different type of low. Because you know that event was, you know, a one-off event, and some brokerage firms had different lows registered. I mean, the lowest trade was lower than others, but I do see what you're talking about with this trend line. You're referring to this one. I'll start paying more attention to this trend line if we rebound again. But yeah, it's not a bad one to have on the chart. If we also take the spike instead, something like this. Yeah. Yeah, you know, something, if you want to combine the two of them, then you can be long with by having this trend line in mind, but give it a little bit more space for the stop loss, so you can also incorporate the possibility that this descending channel is going to do the trick, which currently passes from a little bit above 106, right? So that's how you might want to, you know, combine these two, you know, technical trend lines to trade it to the upside. Now, in general, being long the Euro Swiss is, whenever it's rather low, is never a bad idea, because it's one of the few times that you really have a major central bank having your back, right? So, I mean, as a general thesis, I really can't blame you. I've been long the Euro Swiss multiple times, and pre the floor abandonment, I even made a killing by being long the Euro Swiss and scalping it. It's one of the few times I've actually scalped consecutively on a market, because that's not my trading style. And as I've said before the story, I was super lucky enough to have kind of read the situation that, you know, the floor might not be there forever. So I had, you know, I lightened up my position quite a lot a couple of months before the 2015 event. And not only that, I was one of the very lucky people that once it broke down, I actually got filled because I had a stop loss just below 120, and I actually got filled, completely filled, at an amazing level, something like 119.65, 119.70, something like that. So yeah, I was also incredibly lucky, incredibly lucky. So yeah, that's the story. Anything else? Okay then. So see you all again tomorrow. Have a wonderful afternoon, and let's hope that tomorrow we get some type of a breakout for equities and the dollar, so we have something to trade for the days and weeks ahead. Bye bye.